Hey folks, Dan Frio here with your real estate news for February 5th, 2026. So we had some jobs numbers today. The initial jobless claims, they came in a little higher than I expected. So what's going to go on with these today? Well, that's what we're going to talk about. But what we're going to talk about here in a second is my nephew called me last night and said, Uncle Dan, should I buy? So he's looking to buy in the Pittsburgh area. If you know anything about Pittsburgh, let me know down below. But we had a conversation last night. We went over a bunch of data, and I want to show you my findings at the end of this video. So if you're here watching these things, you're most likely a homeowner. You could be a home buyer. Heck, I hope you're a realtor and a loan officer trying to explain to your clients what in the heck's going to happen with those today and the whys behind it. So the only news we had today, is initial jobless claims and continued claims. Now it's kind of a head scratcher because initial jobless claims went up a little bit higher than I thought, but the good news is continued claims is dropping. So that means people are getting absorbed back into the markets. That's basically the only news we had out today. So this really isn't affecting the markets too much. There was a Challenger report that was posted just before this data, and that's what the market looks like so far today. So if you're new to my channel, here's how we focus in on mortgage rates. This is a mortgage bond. This controls conventional loans, and this one right behind me, these are government loans. You can see Ginnie Mae at the top and UMBS at over there. All you have to understand between these is if the price of the bond's going up, that means yields are coming down. Well, because these are mortgage bonds, that's good news. That means mortgage rates will be coming down. So up 12 ticks. This is going to affect the markets just a little bit. No crashing of rates, but at least it'll put some ease on interest rates. Let's go over to see how the markets are doing, and it's in the red once again. So I told you guys about a week ago or 2 weeks ago, and I'm not saying I told you so, but I said the markets are pretty frothy right now, and I just want to say thank you to my daughter Dana. She's getting married in a couple months, and she basically helped me liquidate my Bitcoin portfolio for the wedding, and I sold out at $95 a coin. Where's it at now? $69. So thanks, Dana, for getting married. So you saved me a lot of profits over through there. So now let's get over to this piece right through here. Should I buy in Pittsburgh? I don't care where you're buying. Here's what I want you guys to do. Okay, so if you're looking to buy your first house, well, if you're a homeowner now, let me know if you're happy over where you live. Because a lot of people, you see these videos, oh my God, the worst thing I ever did was bought this house. Let me know what your thoughts are down below. Okay, so we also have some calculators for you. I'm going to go over in a second that I went over with my nephew. But if you're a homeowner right now, I got a tool for you. Right over through here, we created RateWatch 2.1. It's right up through there. Here's what I want you to do. If you're a homeowner, put in your mortgage information, and then let me know what rate you're looking to refinance, and how much of a monthly savings would you like, and we'll contact you either one of those. So if the mortgage rate hits where you want it to be, we'll contact you. We'll let you know what the new payments will be, the cost and all that stuff, and see if it makes sense. Or you might say, okay, Dan, when it hits, if I could save $400 a month, make sure you call me, and we can do that as well. But let's get over to my nephew and say, should you buy in Pittsburgh? So here's what we did. We said, okay, where you're looking to buy. Okay, what do we really want to find out? If you want to check out my forecast for 2026, where are houses going to be the most robust, I guess to say? Where are they affordable? So here's what we did. We started doing Google searches and AI searches, and here's what came up for us. Okay, so if he bought over the last few years, that's what we wanted to know. How's your market doing? What's the expectations going forward? And the biggest thing we want to look at there is, what are your taxes and insurance doing? Have they skyrocketed? Are they staying normal? And then the last thing is, how much of your paycheck is it going to be take to afford this house? So let's dive into this and figure out our findings. So if he bought in the area that he's looking to buy in 2021, he'd be up 39%. 39%. Okay, so if you don't, please leave some comments down below. This is the findings that we had. So you go down through here, the typical house value, $228. It was $165 then, now it's $229. It's pretty good. The outlook is 0.06 for the next year. Oh, okay, good. Because at least it's not going down. I don't want home prices to keep going up 6, 7, 9, 10% a year. You'd never be able to buy a house. Then we go down through here, what's the outlook? And the outlook's pretty good. But here's the thing we want to focus in ourselves. Right through here. How much are the taxes in the area? Well, the taxes for that area are the PA effective taxes, 1.16 over my head. Okay, if you want tools like this to find out what is my payment, how much are my taxes, what the insurance would be, we have a bunch of tools for you, folks, and I'm going to get there in a second. But when you look at this, you're going to say, okay, the taxes are 1.16. Just to give you a reference, ours in Illinois are 2.2, so it's like double that. Okay, so I'm just saying. Insurance, $1,100. pretty darn good, and that's pretty normal for that part of the country. If you're in the coast, you're getting killed. And then affordability. It takes 22% of your paycheck to afford a house in Pittsburgh. So most of the country, if you're in California, I think it was like 80%. I'm like, you don't even take home 80% of your paycheck. So our conclusion for this was, well, if you're going to stay there for a long time, and most of my family and back in those areas, when you buy, you basically just stay in a house. We just sold my mother's house that my dad built when I was in third grade. We just sold it. I got the check the other day. So it was a great family home, and we didn't really care about depreciation there. We just were excited to have a house and food on the table. So when you look at these things, the affordability is there. Taxes are reasonable. Insurance is good. Appreciation's there and still continuing to grow because of affordability. We were like, heck, if you're going to stay in there long enough, might be not a bad idea. So can you afford it? Let's get over to a tool I have for you. So here's some of the tools that we just created. We have, I think there's 10 or 12 of them down here. Now, I organized these last night. If you went to our station or this website earlier, it was really confusing. We kind of numbered them in the sequence that you'd most likely use them. But here's what we created right through here. Can you afford it, and which program is best for you? The system's going to tell you. Okay, so basically what you're going to do is the calculators are right down below. You're going to say, my nephew said, okay, I'm looking to purchase a house, Uncle Dan. It's about $400,000, putting $20,000 down, single family homes, going through it. He puts in all his details down through here. You can even go down through here. It even puts in more data, okay? What you're going to do is click and say, okay, what do I qualify for? Over on the side, it's going to tell you every program you're eligible for and the whys behind it. And then you can look into those programs and see, maybe, is home affordability in your cards for 2026? Well, for my nephew, it looks like it is. So my name is Dan Frio, folks. Let's get back to why we're here to talk about these things over through here. So the news that we have for today, the jobs report came in and it was a little bit worse than I thought, but the markets are taking in the stride. So mortgage rates are getting a little bit better today. If you're in the stock market, you might be taking it on the chin, especially in Bitcoin. Thanks, Dana. But if you're out there and you need some help, if you're looking to buy, refinance, or just need some help out there, maybe you're a realtor, have a client out there, you're like, man, we're just having a tough spot, or my lender got out of the business. Dan, can you help us out? We'd love to help you out. So folks, my name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. Our slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? Well, the bank I work at provides me a licensing in all 50 states, but they also are set up with almost 40 other lenders. And the reason why we did it, folks, is when you call us, we want to be able to scan all kind of rates, all kind of programs to make sure we're your one-stop shop with that one application, one credit pool, and we can make sure you're getting the lowest rate and the lowest fees in the market. So thanks for watching. Make sure you subscribe down over through there. Make sure you also check out our calculators. There's a whole bunch of those here. Even if you're looking for a reverse mortgage, and we just added yesterday, if you're self-employed, this is the calculator you really need to figure out what income do banks use when I'm trying to qualify for a mortgage. So folks, that's it for this afternoon or this morning. The opening bell, mortgage rates, if anything, they're going to get a little bit better. So that's our news for this morning. So I'll be back later today at the closing bell to let you know how all this mess ends for the day. But so far, if you're in the stock market, you're not very happy. But if you're sitting on the sidelines waiting for mortgage rates to ease a little bit, probably going to see that today. So thanks for watching. I'll see you later today about 3 o'clock with the closing bell to let you know how all this mess ends for the day. Thanks for watching, folks. I'll see you then. Bye-bye.